Hey, welcome back. After dealing with not such a friendly environment, management changes and issues especially in the US, Nike is at some of the lowest ratios in history right now and it's getting quite interesting. But this might very likely be temporary and a majority of this could be traced back to the environment where we see issues for everyone from L'Oreal to Lululemon and Footlocker plus internal issues that a new CEO could change, so let's look into them. Fundamentally, despite the issues, this remains a very solid company with good margins and very profitable. Now, it depends on if you consider a stagnating revenue in a bad environment decent or not. As I'll show in a bit, Nike had the possibility to develop even in such an environment, but it was more of a matter of management, although recently we saw the CEO change. They can make a very solid 5, 6 or even more billion per year, which is actually not bad for a 100 billion market cap, especially for Nike. At the same time, we have to realize that Nike is at less than 20x the cash flow, which is easily the lowest point since like 2010. If they manage to bring back some growth to warrant a higher ratio, this can be a really quick 50 to even 100% profit, but more on this in the valuation. Financially, we see a very good position, with the current assets pretty much covering the total liabilities. The equity isn't really that relevant for this type of company. You know, unless they buy it and include it in the goodwill, which they didn't, the brand for example can be on the balance sheet. How much is the Nike brand really worth? Nobody knows. I see recent statistics placing it at 71.6 billion, so you'd suddenly be very close to the market cap now. But it's not really that relevant because this is more up to a buyer and that's not very likely. Sure, maybe Louis Vuitton or L'Oreal could afford to buy it, so we can never know. Anyway, very healthy overall, so that's definitely a plus. Now, a significant risk in this case is the fact that you have a ton of competition. The brand is very good and by far the most powerful in the industry, but with so many other brands, even if they grow and then fall, the environment is still very tough. If you look at Lululemon or Under Armour before, that's potential revenue and profit that Nike is missing. And it's really not something to ignore. Lulu today makes 20% of Nike's revenue and cash flow. That's a ton of money that they miss, especially when you add other brands that they could have bought. I also want to mention the potential to grow through acquisitions. I said before they should have bought Lululemon for example, and the fact that the brand got so big and they didn't do anything about it is yet another mistake from the previous management. The point is, Nike has its brand loyalty, but the potential for it to grow even more organically is pretty limited. This never had some insane growth rates, by the way. Now, it got to a point where it's so big and you have so many other competitors that acquiring new customers sustainably is very tough. This is why you see them using the brand and going into other products. And Lululemon didn't even do some amazing thing. It found a niche, did well in that and grew from it. Nike can buy any niche they want and has not only the expertise but also the brand and the money to do amazing in it. It's kinda like Amazon using Prime to develop whatever they buy. When this was at 30-40x the cash flow, not even taking the 20-something% growth rate that Lululemon had into account, anything they bought and delivered above a 5-10% growth rate would have been really good for the company. But with thankfully a new CEO, that may finally change. I say that he's focusing on fixing relations with the retailers and giving less discounts, but maybe that's just one thing and acquisitions will be another. They can develop without one and improve the business, but how much more do you think they can grow when they are literally everywhere? On the bright side, unless they somehow ruin the brand, which would be really tough, this company should have a relatively stable and safe revenue and profit. Plus, with rate cuts and an improving global economy, the demand may also get back, so growth at least in line with inflation plus a bit more should be pretty easy. And that's actually good enough for Nike and the industry, and they never really had some insane growth rates, but the ratios were even at like 30-40. To be fair, maybe I'm giving the previous CEO a bit too much because indeed it was far from an easy environment. Now, a pretty significant issue for Nike are the tariffs. Despite diversifying into countries like Vietnam and Indonesia, China remains an important production hub for Nike, plus importing through Mexico and Canada. I don't think they can play this in a way that wouldn't increase the cost of production. Sure, use whatever they produce in China to export into other countries, but if you want to sell in the US, which was already in a bad state for them, they'll probably have to find local suppliers. As you can imagine, that won't be cheap. Anyway, I also want to mention that they currently do huge buybacks plus 2% dividends, paying back pretty much everything they make. This level is kind of similar to PayPal, which is among the biggest on the planet. But how will the new CEO continue? Maybe he wants to focus on investing and cut them, or maybe go full focus on buybacks, we'll see. In my opinion, this would be a very good time to go full into buybacks, but the company is also in a tough position due to the environment and basically no growth in half a decade. He said that raising the stock price is a top priority, but there isn't only one way to achieve it, and the market's short-term reaction can be very volatile. You know, spin-off, debt, acquisitions, a lot of things can make it go up in the long term, but the short term is anyone's guess. Now let's see a valuation. In a bad environment with competitive pressure, maybe a scandal, issues with the CEO or whatever, let's say they get to 4 billion per year. I think a ratio of 15 would be okay, because below that it may become way too cheap for another company not to buy them. That's a 60 billion market cap, meaning a price of 40.56 for a roughly 40% loss. But with the dividends and buybacks it actually becomes much more meaningless, so it's not really that bad. In a second scenario, after tariffs and a better economy, let's say they stabilize at around 5.5 billion in the long term and the market keeps trading them at a ratio of around 20. That's a 110 billion market cap, meaning a price of 74.37, so pretty similar to the current one. With the dividends and buybacks, it might be around a 5-6% theoretical yield per year, which wouldn't be amazing. Now, in a better environment where maybe they buy another company and we see improvements, let's assume they can make 7.5 billion. For a ratio of 30 to reflect some market optimism while not being their highest, that's a 225 billion market cap. That's a price of 152.12, meaning around a 2x plus the potential for much better thanks to the buybacks. Not to mention that they can even ramp them up in such a scenario. By the way, if you want to support the channel and see if and when I buy this or anything else, check out the Patreon link below. So overall, I think it's an okay company that can make a ton of money, and if they manage it right, there could be potential to grow. It's definitely getting interesting, and I don't think it's very far from a buy for me. Now, I'd maybe open a position at something in the 50-60 area, which would give a pretty good margin of safety. Again, very healthy, powerful brand, and in a position where they can really benefit from the current environment. If they focus on acquisitions or other ways to deliver even a bit of growth, this can maybe get back to the previous ratio, and that's by default a nice profit relatively quick plus the long-term potential. As always, what I cover in my videos shouldn't be enough for you to make any investment decisions, so please do your own research before investing in anything. If you want to see more videos like this one, please leave a like and even a comment to help me out, and make sure to subscribe. Thank you for watching, and I'll see you next time.